How's it going, everybody? This is BeatTheBush. Tech companies make a lot of money, and sometimes I like to figure out how much they make per employee. Today, I'm going to take a look at the earnings per employee of various tech companies. This video is brought to you by Moomoo, the commission-free trading app. You can get 5 free shares of stock just for depositing $100 and a total of 15 free shares of stock just for depositing $1,000. Many of these brokerage apps gives you interest on your uninvested cash. For a limited time, you can get 8.1% for 3 months. After that, it will revert back down to 5.1%, which is very competitive for trading apps. If you guys are interested, check out my affiliate link down in the video description below. This is on Google Finance, and we can see the Meta stock price, $458. On the right hand side, you can see the previous close, the day's range price. When you see the dividend yield, that's how much they'll pay per year. However, you're not going to get exactly that amount if they pay per quarterly. It'll be about 1/4 of that. Or if it's monthly, it's 1/12 of that. So it's not going to be like 0.43% payout every single time. If you look down a little bit more, it says CEO is Mark Zuckerberg, and then number of employees, 69,329. That's the number we need in order to figure out the earnings per employee. Now we skip down a little bit more to the financials over here. It defaults to the quarterly, so you can just pretty much add up the last 4 quarters to see what the earnings are. The blue bar is revenue, which is like, when you sell like a washer, right? It's $2,000. Your profits is not the full amount of that device. That is the revenue. And then when you have the net income, that's actually how much they profit after a bunch of other things that they subtract out, including how much they pay for employees, operation costs. So this is just kind of like a ballpark number that I want to figure out. So you just click on annual over here. We see Meta's annual revenue. It's huge, $134 billion. And then they have a net income of $39 billion. This is crazy. 39 divided by 134. So that's 29% margin after they pay leases, all the salary employees, they still make that much. That's the number that we're looking for, $39 billion in profits. So we go back to the number of employees over here, 69,329. Simple math, divide the 2, and we get this. So I have done this for some of the more popular tech companies. So the Facebook, 39 billion divided by 69,329, you get $563,000 earned per employee. That's super high. No wonder they can pay like $400,000 for engineers. Sometimes I like to look at this when you're an employee at that particular company. You just kind of want to know, hey, roughly how much do they make? Should you not at least get like a portion of their total earnings? Now this number over here already factors in employee salary. So they've taken that out. This is the amount they earn on top of salaries. So if you take out salary, it's likely quite a bit more than that. Let's take a look at Apple here. 97 billion earnings divided by 161,000 employees is a $600,000 per employee. The 161,000 employees, they're not all engineers, right? Sometimes you have, higher paid people, managers, and then you also have lower paid people at the retail stores. So this is a little bit misleading because some companies might have many, many more lower paid employees. Let's move on. Amazon made $30 billion divided by 1.5 million employees. So there's an example. They probably have more than 1 million people working at Amazon warehouses and working as delivery people. So their earnings per employee is a lot lower, $20,000. That is not to say that that's exactly bad or anything. They just have a lot more employees. Even though you're only earning 20K per employee, you have a lot more of them. So you multiply that out, you still earn billions of dollars. Netflix earns 5.4 billion, comparatively lower. And they have 13,000 employees. It seems like they don't have a lot of physical warehouse workers. They still earn 416,000 per employee. Google, 73 billion, 180,000 employees, earn $407,000 per employee. Tesla earned 15 billion with 140,000 employees. They earn $106,000 per employee. Now look at Nvidia over here. They earn $29.7 billion with 29,000 employees. This is relatively low compared to other companies. It seems like they're mostly technical people and they're still earning $1 million per employee, pretty much the highest in the industry. mainly because they have a blowout year selling all those AI chips. And I would say this is not the norm. So what's the use of looking earnings per employee? Similar to PE ratio, you kind of need to look at the other factors of the company. When you look at Apple, they have a lot of retail employees. I would mostly use this information to see how much the company I'm working for, how they're able to afford to pay me. If you are a super high performer, I think you can command almost 80% of the earnings per employee. Now that needs to be like a super rock star. You are absolutely needed at that company. You are critical to their entire infrastructure, to their company. If you are a average worker, you're probably gonna earn a lot less than the earnings per employee. If it's a public company, you can also take a look at how they're doing over the long term. Are they earning enough money? If they're kind of sagging a little bit, they might not be able to afford you long term. You also want to look at if they're like Amazon, right? Traditionally, they actually don't make that much money. They've invested all their money back into their business. Go to their annual statement, take a look at back in 2019. Unfortunately, there's not more data in Google Finance. $11 billion, right? They're like kind of dragging their feet on earning more and more money. Even in 2022, they lost $2 billion and then $30 billion. It seems like they just don't have anywhere to put all that profits. They're certainly investing a lot of their profits after they subtract out the cost. They're like, oh, I got this billions and billions of dollars. Okay, let's just spend it on, opening up more warehouses and stuff, just to reduce their taxes. So you take a look at 2013 revenue, 574 billion, operating expense, 233 billion, and this expense is easily changed. They can actually tailor this expense as much as they want to just by buying more stuff and say, hey, we're expanding. The balance sheet is kind of like net worth for a company. They're going to add in all their assets, how much cash they have. Maybe they also have a stock portfolio. They add all this up. They tell you the total assets, $527 billion. And then they have liabilities, $325 billion. This is like how much potentially they may owe other people. When you subtract the two, similar to net worth, you have your total equity, which is here $201 billion. Obviously, you want your total equity to grow. That's kind of like net worth. You want to grow it so that you have more firepower to run the company. They issued a number of shares, 10.39 billion. So we get to price to book ratio. This is a term that Warren Buffett really likes to use to have kind of like a valuation of their company and if their stock is a good buy or not. So you divide total equity divided by the number of shares. Each share will have about a $20 net worth of the company. And then you take a look at the current stock price, $183. 183 divided by 20, that's around 9. We have a price to book ratio of 9. So every share that you buy, you have to pay the amount of net worth that share has times 9. Every industry will have a different kind of price to book ratio. And within the same industry, you can kind of look at, well, this one, the price to book ratio is a little high, or if it's low, you're like, oh, that's a great deal. You can buy more of it. And so that's all I want to say about reading financial statements. When I first started investing in high school, when I look at the financials, it was just like, what are all these numbers? It's just so confusing. All you look at is the price. That's it. You're like, oh, is it going up or down? But looking deeper into the company, it's crucial. I hope this video is informative for you guys and helping you evaluate companies on your own. Certainly earnings per employee is a very, very interesting metric. Thanks for watching this video. Don't forget to check out my Moomoo referral link. I'm over here in the Bay Area of California. It's summer over here. It's super hot and it's vacation time. So I'm gonna go do some stuff outside. Thanks for watching this video. Don't forget to give me a like and subscribe for more.